My dear students, welcome back to our channel. In this video, I will be explaining the Bachelor of Commerce 4th semester subject Income Tax as prescribed by Osmania University and other universities of Telangana. We will go through the important questions and answers one by one. Let's begin with a quick revision. Unit 4. The first important short question is 1. Definition of business and profession. Under Income Tax Act, the terms business and profession are used to classify incomes. Business. Business means any trade, commerce, manufacturing or any activity done regularly to earn profit. Even small shops, online sales, or large companies are considered businesses. Example. If Ramesh runs a grocery store or sells clothes on Amazon, it's called a business. Profession. Profession means an activity that needs special skills or qualifications. Professionals usually offer services using their knowledge. Example. If Dr. Priya works as a doctor or Ravi is a chartered accountant, it's a profession. Easy to remember. Business is equal to profit through trade work. Profession is equal to income through skills knowledge. Both are taxed under the profits and gains from business or profession head in income tax. So, whether you sell goods or offer services, income from both is covered here. Next important short question is 2. Deemed profits. Deemed profits mean the income that is not actually earned as profit but is treated as profit under the Income Tax Act. These are profits that are assumed by law, even if the business didn't earn them in the normal way. Why deemed profits? Sometimes businesses do things to avoid showing actual profits. To stop this, the government says, even if you didn't earn this profit, we will treat it as your profit. Examples of deemed profits. 1. If a business sells goods below cost price to a sister concern, the difference may be treated as deemed profit. 2. Recovered bad debts. If you already claimed a deduction for bad debts earlier and now you recover it, it is deemed profit. 3. Any unexplained cash or investments found during inspection is treated as deemed profit. Easy to remember. Not earned but taxed as earned. That's deemed profit. Next important short question is 3. Income from profession. Income from profession means the money earned by using your skills, knowledge, or talent in a professional field. Who earns income from profession? People who use their special skills or qualifications to work independently or give expert services. Examples of professions. A doctor running a clinic. A chartered accountant, CA, filing income tax returns. A lawyer giving legal advice. An architect designing buildings. A freelance graphic designer creating logos. Taxable income from profession. It includes fees received from clients, consultation charges, professional retainers, any other income from your professional work. Easy to remember tip. If someone earns not from a job or business, but by using their personal skill or knowledge, it's professional income. Example, if Dr. Neha earns 10 lakhs rupees from her clinic, that's her income from profession, and she will pay tax on it after deducting her clinic expenses. Next important short question is 4. Indexed cost of acquisition, V.IMP. Indexed cost of acquisition. Indexed cost of acquisition means adjusting the purchase price of an asset, like land, house, gold, etc., for inflation using a number called the Cost Inflation Index, CII. Why is it important? It helps reduce capital gains tax when you sell an asset by increasing the original cost based on inflation. Simple formula. Indexed cost is equal to purchase price times CII of sale year divided by CII of purchase year. Example. Mr. Arjun bought a plot of land in 2010 for 3 lakhs rupees. He sold it in 2023. CII for 2010 is equal to 167. CII for 2023 is equal to 348. Indexed cost is equal to 3 lakhs rupees times 348 divided by 167 is equal to 6,25,449 rupees. So instead of 3 lakhs rupees, the cost is considered 6.25 lakhs rupees while calculating profit. Easy to remember. Inflation बढ़ता है, tax कम होता है. Indexing helps you pay less tax on your capital gain. Next unit 4 important long questions. First important long question is 1. Allowable expenses under sections 30 to 37 of Income Tax Act. Under Income Tax Act, sections 30 to 37 deal with expenses that are allowed as deductions from business or professional income. These help in calculating net taxable income. Let's understand them with examples. Section 30 Rent, rates, taxes, repairs for building. If you use a building for business, owned or rented, you can claim. Rent paid. Municipal taxes. Repairs. Example, if a shop is rented for 10,000 rupees per month, then 1,20,000 rupees, 10,000 times 12, is deductible. Section 31, Repairs and Insurance of Machinery. Expenses on repairing or insuring machinery or vehicles used in business are allowed. Example, repairing a delivery van for 15,000 rupees is allowed. Section 32, Depreciation. When you buy assets, like furniture, computers, you can't deduct the full cost. Instead, claim depreciation every year. Example, on a machine worth 1 lakh rupees with 15% rate, 15,000 rupees is deductible. Section 33 AB and 33 ABA, tea coffee rubber mining business. Special deductions for specified businesses who deposit in a special account. Section 35 Scientific Research. Any expense for scientific research or donation to research institutions is deductible. Example, donation to IIT for R&D is deductible. Section 35D Preliminary Expenses. Initial business setup expenses, like legal fees, project report costs, are allowed over 5 years. Section 36 Other deductions. Includes insurance of stock, bonus to employees, interest on borrowed capital, bad debts. Section 37 General Expenses. Any business-related expense not covered above and not personal is allowed. Example, mobile recharge for business calls is allowed. Easy to remember tip. Business के काम का खर्चा टैक्स से बचा. If it's for business, most of the expenses can be claimed. Next important long question is 2. Miscellaneous provisions under Section 44 of Income Tax Act. Section 44 of the Income Tax Act contains special provisions for certain types of businesses and professions where income is presumed and books of account are not compulsory. These are designed to make tax filing easier for small taxpayers. 1. Section 44 AD for small businesses. This is for small business owners, not professionals, with turnover up to 2 crore rupees. Presumed income. Income is considered as 8% of turnover if received in cash, or 6% if received digitally. Example, if your turnover is 50 lakhs rupees and received all by check, your taxable income will be 3 lakhs rupees, 6%. No need to maintain books or audit. 2. Section 44 ADA for professionals. This is for professionals like doctors, engineers, architects, lawyers, having income up to 50 lakhs rupees. Presumed income. Income is considered as 50% of total receipts. Example, if a doctor earns 40 lakhs rupees, taxable income will be 20 lakhs rupees, 50%. Books and audit not required if opting for this. 3. Section 44A for transporters. For owners of goods vehicles not having more than 10 vehicles. Presumed income per month per vehicle. 1000 rupee per ton for heavy vehicles. 7500 rupee per month for other vehicles. Example, 2 trucks for 12 months is equal to 1,80,000 rupees, 7,500 times 2 times 12. Important points to remember. If you opt for these sections, you cannot claim extra expenses separately. You must file ITR 4. Advance tax still applies. Easy tip to remember. 44 AD Dukan business. 44 ADA doctor designer profession. 44 AE engine transporters. These provisions are like shortcuts for small earners, save time, effort and paperwork. Next important long question is 3. Define depreciation and explain conditions for charge of depreciation. What is depreciation? In easy words, depreciation means the reduction in value of an asset over time due to wear and tear, use or age. For example, if a company buys a computer for 50,000 rupees and after 5 years, it's worth only 5,000 rupees, the value has reduced. This fall in value is called depreciation. In income tax, depreciation is allowed as a deduction to reduce taxable income. Why is depreciation important? When a business uses machines, buildings, vehicles, etc., their value goes down every year. The Income Tax Act allows businesses to claim this loss, called depreciation, as an expense, so that they pay tax only on actual profit. Conditions to claim depreciation. Here are 5 simple conditions that must be fulfilled. 1. Asset must be owned, wholly or partly, by the taxpayer. You must own the asset, fully or partly. Example, if you buy a vehicle in your name, you can claim depreciation. 2. Asset must be used for business or profession. You can't claim depreciation on personal use assets. Example, a machine used in your factory allowed. Personal car not allowed. 3. Asset must be used during the previous year. If the asset is not used in the year, you can't claim depreciation. 4. Depreciation is allowed only on tangible or intangible assets. Tangible is equal to buildings, vehicles, furniture. Intangible is equal to patents, copyrights, etc. 5. Depreciation is allowed on WDV, written down value. It is not calculated on purchase price after the first year. Additional points to remember. If an asset is used less than 180 days in a year, only half depreciation is allowed. You cannot claim depreciation on land, only on buildings. Depreciation is compulsory under income tax. Easy trick to remember. Owned used business, WDV, 180 days is equal to conditions for depreciation. Next important long question is 4. Mr. Gopal submits the following particulars for the year ended 31st March 2020. Compute his income from business. Additional information. 1. Interest paid on loan for purchase of machinery. 2. As per the Income Tax Act, allowable depreciation is 30,000 rupees. 3. Repairs included in capital expenditure 12,500 rupees, current year repairs 5,500 rupees. 4. Proprietor salary included in salary 25,000. 5. General expenditure included 15,000 rupees paid as penalty for violation of income tax rules. Let's calculate Mr. Gopal's income from business. Step 1. Start with net profit. Net profit as per profit and loss account is equal to 5,32,400 rupees. Step 2. Add disallowed expenses. These are not allowed under income tax. Disallowed expenses amount, reason. Proprietor's salary, part of salary, 25,000 not allowed as it's not business expense. Income tax 10,000 personal, not allowed. Security transaction tax 6,000 not allowed under income tax. Provision for taxation 3,000, it's a provision, not an actual expense. Provision for bad debts 8,600, only actual bad debts are allowed. Depreciation, book, 45,000, we will allow 30,000 rupees separately as per Income Tax Act. Capital part of repairs 12,500, capital expenditure not allowed as expense. Penalty in general expenditure 15,000, penalty for breaking income tax law not allowed. Total additions is equal to 25,000 rupees plus 10,000 rupees plus 6,000 rupees plus 3,000 rupees plus 8,600 rupees plus 45,000 rupees plus 12,500 rupees plus 15,000 rupees is equal to 1,25,100 rupees. Step 3. Less allowable deductions. We deduct these from net profit. Allowed items amount, reason. Depreciation, as per IT, 30,000 allowed by income tax. Bad debts, actual, 6,000 actually written off, hence allowed. Total deductions is equal to 30,000 rupees plus 6,000 rupees is equal to 36,000 rupees. Step 4. Compute business income. Adjusted business income is equal to net profit plus additions, deductions, is equal to 5,32,400 rupees plus 1,25,100 rupees to 36,000 rupees, is equal to 6,21,500 rupees. Final answer, Mr. Gopal's income from business is equal to 6,21,500 rupees. Next important long question is 5. Compute income from business for the assessment year 2024 to 2025 along with adjustments. Profit and loss account. Adjustments. 1. Salaries include 1 lakh rupees towards the domestic servants. 2. General expenses include 2 lakhs rupees towards his personal use. 3. Electricity bill of 3 lakhs rupees was not debited in profit and loss account. 4. Income from discount received 3 lakhs rupees was not credited in profit and loss account. Let's compute income from business step by step for the AY 2024 to 25. We'll start with the net profit and then adjust it based on the income tax rules. Step 1. Start with net profit. Net profit as per P&L is equal to 16,49,000 rupees. Step 2. Add disallowed expenses. These are not allowed as business expenses. Disallowed expenses amount, reason. Domestic servant salary, personal, 1 lakh personal, not related to business. Income tax 1 lakh personal, disallowed under IT Act. GST, assumed penalty fine, 7 lakhs if not related to business. GST input, disallowed. Provision for bad debts 1 lakh, only actual bad debts allowed. Personal use from general expenses to lakhs not for business. Drawings 1 lakh personal expense. Gift to son-in-law 1000 personal expense. Gift to poor students 50,000 treated as donation, not business expense. Total additions is equal to 1 lakh rupees plus 1 lakh plus 7 lakhs plus 1 lakh plus 2 lakhs plus 1 lakh plus 1000 plus 50,000 is equal to 13 lakhs 51,000 rupees. Step 3. Less allowable expenses not debited. Allowable expense amount, reason. Electricity bill, business use, 3 lakhs allowed since missed in books. Total deductions is equal to 3 lakhs rupees. Step 4. Add business incomes not credited. Income not credited amount, reason. Discount received 3 lakhs business income not recorded. Add 3 lakhs rupees. Step 5. Compute adjusted business income. Now, plug into the formula. Adjusted income from business is equal to net profit 16 lakhs 49,000 rupees. Additions 13 lakhs 51,000 rupees. Deductions 3 lakhs rupees. Unrecorded business income 3 lakhs rupees. Total is equal to 16 lakhs 49,000 rupees plus 13 lakhs 51,000 rupee minus 3 lakhs rupees plus 3 lakhs rupees is equal to 30 lakhs rupees. Final answer, income from business is equal to 30 lakhs rupees. I hope you understand easily each question. All the best students for your upcoming exam. For other subject quick revision. Important questions. Previous question papers. And syllabus. Links are available in description. Check out once. Thank you for watching. Like and share this video with your friends.